What's happening, friends? Welcome back to Dynamo DeFi. My name is Patrick, and on this channel I talk about cryptocurrency, decentralized finance, and economics. Today's video is about what sorts of coins to look for in a bear market and how I'm going about constructing a bear market crypto portfolio. I'm also going to go through a very important concept called the Lindy Effect that's important to understand if you want to be able to predict which coins will survive a bear market. And remember that nothing I say is financial advice. Although I'll talk about a number of crypto assets, you should still do your own research before investing in any of them. Let's get into the video. The crypto bear market is upon us. Many projects have already dropped 50 to 90% in value. And we don't know when things are going to recover. If you believe in the future of the industry, which you probably do if you're watching this video, then you believe that at some point there will be another bull market. I do. I don't know whether that's going to be in 6 months, in a year, in 2 years. But in the meantime, things will be bearish, and a lot of people are wondering, how do you maintain exposure to the crypto market? How do you continue to build a portfolio that will survive this bearish period? And the first thing you need to understand is sort of what happens in a bear market, right? And what happens is, first thing is that funding dries up, right? A lot of the projects, a lot of their treasury may have been on their own token or in other crypto assets, so their treasury might already be down. Then because the industry isn't in the news all the time, or isn't in the news for good reasons, there's going to be fewer people willing to invest in new projects or invest in advanced funding rounds of existing projects. Additionally, the users dry up, right? There's fewer people actually using crypto-based projects. And so basically what this means is that the projects won't have as much money and resources to hire developers, build partnerships, all the things that tech companies and other businesses need to do. And not every project is going to make it, right? So not every project survived the last bear market from 2017. Not every project will survive this bear market. So the number one priority as you're looking at building a bear market portfolio is selecting projects that are going to survive. And in order to do that, it's really important to understand a concept called the Lindy Effect. And the Lindy Effect comes from outside of crypto, so many of you are probably already familiar, but I'll go through exactly what it is and how that applies to crypto in this video. And what the Lindy Effect basically states is that for non-perishable objects, the longer they've been around, the longer they're likely to be around in the future. So an example of that would be if a book has been in publication for 1 year, its future life expectancy is probably only another year or two, whereas if a book has been in publication for 100 years, then it's probably going to be around for another 100 years. And fun little historical tidbit, the reason this was called the Lindy Effect is that there's a delicatessen in New York City called Lindy's, and it was a go-to place a while back where comedians who were performing in the area would go to hang out. And these comedians, being creative types, came up with a rule eventually where they noticed that the comedians who had been around for longer were likely to stick around for longer. So the new guy who has a new show and it's his first month, his future life expectancy of his show might only be another few weeks or month. Whereas the guy who's been around for 5 years is probably going to be around for another few years just because he's established his popularity and his act has proven to have sticking power. And it turns out that this effect applies to many, many things in life. So a quick little diagram just to help illustrate this further. You have on the bottom axis here, current age, and on the left axis, you have future life expectancy. And then you can see the example I did is a little icon of a book here, right? So the book that's only been around for 1 year, probably only going to be around for another year, right? Its future life expectancy is not very high. Whereas the book that's been around this long, say a classic, right, like a Mark Twain novel in the US, or maybe even, it's been around for 1,000 years. It's a historical document or a religious text. It's going to be around for another 1,000 years. And so that's basically how the Lindy Effect works. And you're probably saying, well, what does it have to do with crypto, right? That's very interesting, but what's the connection? Well, you can apply the same thing to crypto, right? Where you can say that an asset that's been around for 5 years, let's say Bitcoin even. Bitcoin's been around for over 10 years at this point. Which is more likely to still be around in 3 years. Say it's a really bad bear market, takes 3 years. I think probably that's a bit lengthy, but say it takes 3 years to recover. Bitcoin is still going to be around in some form. Ethereum is still going to be around. It's been around for 7 years now? 6-7 years? It's still going to be around in a couple of years in some form. Will a coin that launched in the last 6 months still be around in 3 years? Most of them probably won't be, to be honest. Some of them will be, right? And some of those are going to be big winners, but most of them probably won't be, and we probably won't know for sure which ones will be until we've gone a bit deeper into the bear market, right? And so the first sort of tenet of building a bear market portfolio, and that ties into the Lindy effect, is to accumulate projects that have had lasting power through at least one previous bear market. And so that's sort of my first priority is I'm looking to accumulate solid projects that will track at least the overall growth of the crypto market, but that have survived a past bear market. And that's Bitcoin, of course. That's Ethereum. That is, we have to scroll down a bit because it's dropped in price, but that's actually something like Chainlink, right? Something like Chainlink is an oracle. It's used by every DeFi project in the space. It started in early 2018, or at least that's late 2017, in fact, and survived the previous bear market, continued building, hiring, and then took off even before the current bull market. So something like Chainlink, you can argue about their tokenomics and whatnot, but something like Chainlink is going to be around in the future. Another one actually that I like is Monero, right? Monero works similar to Bitcoin, but is private. It's been around since 2014, and it has a proven use case because people who want to transact privately need to use Monero. And yes, some of those are illicit reasons, some of those are legal reasons, but regardless, Monero will be around, right? There's always going to be a demand for private transactions, and it's proven that it can last through multiple bear markets at this point. So there's no reason to think that it won't still be around in a year, 2, 3. So those are the first sorts of things that I'm looking at accumulating. Actually, another good one, and this ties into the next category of coins that are somewhat Lindy, is actually BNB, right? BNB was sort of more of the rage last spring than it was in the fall. But if you look at BNB, Binance has been around since 2017. And importantly, Binance is also an exchange, which means that it has actual revenue and users coming in. Even if those goes down in a bear market, it actually has revenue to make sure that it can continue operating as a business. And something like BNB has had solid staying power throughout this entire past year. And there's no reason to think that BNB wouldn't last another 4-5 years. I mean, there are reasons, but it's more likely than not that it survives, right? And so that ties into the next category that I think has staying power, and that is actually other exchange tokens. So if we look at some of these on CoinGecko here, we can see that BNB, of course, is one. Another interesting one is Unisedleo, which is the token for Bitfinex, right? This one it's back in the top 20 now, but it was in the top 20 also 2 years ago. And if you look at the length of this, it's been around since 2019, so not quite since the start of the last bear market, but Bitfinex has been around for 10 years, right? And this is the token for Bitfinex. So is Bitfinex still going to be around in another 3 years? Probably, because it's been around for 10 years already. Kronos, FTX token, KuCoin, my favorite exchange personally. And if you want to accumulate one of these, then easy way to choose is, well, you can go with BNB, the biggest one, or you can say, like I always like to do, is which app do you find useful, right? If there's an exchange that you're using a lot, and they have a utility token, then you could accumulate that utility token as part of your portfolio, presumably get some benefits since it's used on the exchange. Many of these tokens also receive a portion of the exchange fees, or the exchange does buybacks with their fees. And then if you find the app helpful, probably other people do too. I like KuCoin because it's kind of like the younger brother of BNB, but unlike BNB and FTX, they actually allow people in the United States to use it. And so basically that's the other category that I'll be looking to accumulate in my portfolio, although at a smaller allocation than something like Bitcoin or Ethereum. And then, that'll be sort of the crux of the portfolio. And then over time, as we get deeper into the bear market, that's when I'll start looking at other platforms and other coins that might have higher returns in the next bull market, right? And it's okay if you miss the start of the initial run up, right? When something like, when Bitcoin started to grow after the end of the last bear market, say, let's zoom in here, started to grow up here throughout 2020, most alts didn't really take off until here, but you already had time to see that Bitcoin was starting to go up. So you don't have to catch the start at the beginning, but regardless, I will be doing research and trying to accumulate some other coins as well. But it's important to keep in mind that not every coin necessarily has staying power. So take layer ones, for example. So layer ones are some of the best performers in the bull market, but some of the worst in the bear market. And I think a lot of people are probably wondering, why haven't I mentioned so far coins like, say, Solana or Avalanche, two projects that I've covered a lot and that performed very well this year, and actually projects that I like. And the reason is that these coins are newer, right? And especially for smart contract platforms, there's no guarantee that they'll have the staying power or continue to be around in another couple of years. I suspect these two probably will. But regardless, as we go into the bear market, we should have plenty of time, even if it's only months, to see which of these platforms have people building on them and then start allocating accordingly. And so a few that I'll be watching are, BNB is also a layer one, but it's more of an exchange token in my view. Let's filter to smart contract platforms. So actually we'll be watching Cardano. I haven't covered it much, but I'll be interested to see if they can attract developers, right? They do have a very strong community. Solana, huge treasury, very large number of apps already, large number of NFTs, despite some of the blockchain problems. So I'll be watching to see whether they can fix some of their issues and whether they can continue to attract new people. Polkadot, I don't know if I've ever actually covered it on this channel, but founded by one of the co-founders of Ethereum, like Cardano, Gavin Wood, who was also the inventor of the Solidity programming language. And not only that, Polkadot has finally started to have some dApps build on it over the past 6 months. So I'll be watching to see whether they can gain traction in the future, and maybe it could be a decent winner if in the next bull market if they're able to gain some traction before then. Tron is actually doing well right now, so it's worth following to see whether they can attract more builders. Avalanche, already mentioned. Polygon is sort of a layer one, sort of a layer two, probably transitioning to more of a layer two. And these rules would apply to layer two platforms as well. Let's see what launches on there. They just had some major partnerships. And then, you can kind of go down the list. Near, Algorand's got some interesting stuff. HBAR has started to have a bit of a DeFi ecosystem. And there's a lot more too, like Phantom and so on. And then basically what you want to do is eventually find, say, one or two that have a large amount of development on them, and then become an expert on those. If you want to invest in alternative layer ones, right? You could just stick to the Ethereum ecosystem. But if you want to invest in alternative layer ones or layer twos even, find a couple that have good growth prospects and become an expert on those. Last cycle, I did that to some extent with Avalanche, and I did that also with the Cosmos ecosystem. Now, another one that I'll definitely be following, Atom isn't on here, I guess because it's a bit different since it's more of a layer zero, although a lot of people don't like that term, but it's more of a layer zero since they don't actually have smart contracts on the Cosmos hub. But I'll be watching Atom and the Cosmos ecosystem as well. But anyway, so last cycle I became an expert on Avalanche and Cosmos and use that to find projects that are early, right? So say you decide that you think that Algorand is going to be big, right? You like their backers, the founder of it is one of the most renowned mathematicians in the world. They have smart contracts in Python. There's reasons why someone might decide that they liked Algorand. And so then what you want to do is you want to become an expert on that ecosystem, and you want to be able to identify every new project that launches early, right? And so like I said, last cycle, I did that to some extent with Cosmos, which is why I got into Osmo really early, why I got into Juno really early, because when you are an expert on the ecosystem, then you can see when new innovative things launch, right? And so you're not just having to buy into the hype on Twitter or YouTube or Reddit, wherever you get your information from. Then you can actually be able to have an informed perspective on these things, and you can know about things right when they launch. And so that's basically how I'll be playing layer ones, watching for who ends up building more development. And then, some of you might also be asking, well, what about new projects, right? What about this small DeFi project, this small game, this small NFT project? And I think those are great too. But again, if it's new, then you don't necessarily know whether it will have the staying power to survive in a bear market. And if things go down from here, then projects like that are going to get absolutely obliterated. And that's, you'll have dirt cheap bargain basement prices where you can buy these things at a price that seems almost like you're stealing, right? Like it's down, some are already down 90%, but imagine if it drops again by 50% or more, right? Down 95% from the high. And so basically for that, my advice would be similar to smart contracts. Well, not really advice, but sort of what I'll be doing would be similar to smart contracts, would be I'll become an expert on one or two things, right? That's what people ought to do, is say you want to invest in GameFi, become an expert on GameFi, or maybe even a specific type of GameFi, and then you'll be able to identify the 2 or 3 projects that have solid builders and have a strong growth potential, and then you'll be able to allocate heavily to those. Same thing with DeFi, maybe even a specific type of DeFi, right? If we filter to DeFi platforms, then we can see that there's a lot of different things. There's DEXs like Uniswap. There's Aave, a lending platform, and so on. Maybe you say you want to become an expert on DEXs. You want to become the expert on DEXs. Then you could know everything to do with the tokenomics of a DEX, the incentives, the different user experience features, and so on and so forth. So that way, when new DEXs come along, you'll be able to very quickly identify whether they have something that makes it worth investing in. And there are people, for example, who got in really early to things like Thorchain because they had a deep understanding of how a DEX that was set up like Thorchain would be able to accrue value. And a lot of people made 100x on Thorchain at the peak. Some people made even more than that. And that's where you're going to get these massive outsized returns in the future, right? And that's basically what I'll be doing. And until I find it's time to start accumulating these projects more heavily, what I'll be doing is taking those solid sort of long-term projects that I mentioned at the start of the video, finding opportunities to earn yield on them in DeFi, and then using the yield to accumulate these really cheap DeFi projects or gaming, again, if that was what someone was into. But basically, that's what I'll be doing during this bear market. I'll continue to cover things that I find interesting on this channel, as well as moves that I'm making. But I'm really interested to hear what strategies all of you guys are using. Are you buying similar things to what I am, or do you have other ideas for which things will survive long term? That's all I got for today. Until next time, this is Dynamo DeFi.